Artificial intelligence has become both an opportunity and a challenge within cybersecurity. Machine learning algorithms improve threat decision by analyzing massive quantities of network data in real time. However, cybercriminals also use AI to automate phishing campaigns, generate convincing fraudulent communications, and identify potential vulnerabilities more efficiently. Industry experts therefore expect cybersecurity spending to remain a priority, regardless of broader economic conditions. Moving to financial services. Banks generally reported stable profitability despite higher funding costs. Net interest become and remains supported by elevated interest rates, although competition for customer deposits has intensified. Digital banking continues expanding rapidly. Consumers increasingly prefer mobile applications capable of running investment management, payments, budgeting tools, and lending services through integrated platforms. Traditional financial institutions continue investing heavily in digital transformation to remain competitive. Fintech companies also remain active. Many startups are developing AI-powered financial planning tools capable of analyzing spending behavior, estimating future savings, and recommending personalized investment strategies. Regulators continue monitoring these innovations carefully to ensure consumers' protection while encouraging technological progress. Turning to commodities, oil markets remain relatively balanced. Global demand continues growing steadily, while production decisions by major exporting nations include price movements. Uh, Energy analysts expect moderate volatility as geopolitical developments continue affecting market expectations. Natural gas prices fluctuated in response to weather forecasts and storage data. Meanwhile, industrial metals attract renewable investors' attention. Copper remains one of the most strategically important commodities due to its extensive and renewable energy system, electric vehicle telecommunications infrastructure, and data centers. Nickel, lithium, cobalt, and rare earth elements also continue benefiting from long-term electrification trends. Mining companies announced additional investments aimed at increasing future production capacity. However, obtaining permits for new mining projects often requires many years, potentially limiting the future supply growth. Agriculture markets experience moderate price fluctuation driven by weather conditions, transportation costs, and changing export demand. Climate scientists continue warning that increasingly unpredictable weather patterns may contribute to greater volatility in global food production over coming decades. Let's discuss digital assets. Bitcoin remains one of the most actively traded cryptocurrencies. Institutional investors continue increasing participation through regulated investment products and professional custody services. Supporters argue that broader institutional involvement has improved market maturity and liquidity. Skeptics continue emphasizing ongoing volatility and regulation uncertainty. Ethereum develops continued improving networks efficiency while decentralized finance applications attracted additional user activity. Blockchain technology also continues expanding beyond cryptocurrency. Major financial institutions are experimenting within tokenized assets, digital settlements, and blockchain-based payment infrastructure capable of reducing transaction costs and improving settlement speed. Several central banks continue researching digital variations of national currencies, although implementation timelines vary significantly. Policymakers generally agree that digital payment technologies will play an increasingly important role within future financial systems. Corporate earnings remain another major focus. Executives across multiple industries continue emphasizing operations efficiently rather than pursuing aggressive hiring. Many companies now prioritize productivity improvements through automation, artificial intelligence, and improved data analytics. Businesses also remain disciplined regarding capital expenditures. Higher financing costs encourage management teams to allocate investments more selectively than during previous years of exponentially low interest rates. Investors increasingly reward companies demonstrating consistent profitability, healthy cash flow, and sustainable competitive advantages. Speculative growth alone has become less attractive than during earlier market cycles. Looking ahead, economists expect several themes to dominate financial markets through the coming year. The evolution of artificial intelligence will likely remain one of the most largest investment stories globally. Interest rate policy will continue influencing borrowing costs, housing activity, and business investment. Geopolitical developments will shape energy markets and international trade. Climate-related investments will accelerate moderation of infrastructure and transportation. Healthcare innovation, biotechnology, robotics, and advanced manufacturing are also expected to receive substantial investments as government corporations pursue long-term economic competitiveness. For individual investors, diversification continues representing one of the most frequently recommended strategies. Owning assets across different industries, regions, and investment styles may help reduce portfolio volatility during periods of market uncertainty. Professional financial advisors continue reminding clients that successful long-term investing often depends more on consistency and disciplined decision-making than on attempting to predict short-term market movements. While headlines frequently focus on daily fluctuations, long-term wealth creation has historically been driven by patience investing, regular contributions, and maintaining exposure to productive businesses capable of growing earnings over many years. That concludes today's financial news briefing. Properly markets remain under pressure. Developers continue restructuring debt while policy markets attempt to stabilize housing activity without encouraging excessive speculations. Consumer spending has shown gradual improvement though households remain cautious regarding major purchases. Export activity remains an important contributor to economic growth. Manufacturing companies continue adapting supply chains in response to changing international trade patterns. Vietnam, India, Indonesia, and Mexico have attracted increased foreign investments as multinational corporations diversify production beyond traditional manufacturing centers. This broader geographic distribution of industrial capacity reflects lessons learned during previous supply chain disruption. Japan continues benefiting from improved corporate governance. Many publicly traded companies increased dividend payments while expanding share repurchase programs intended to improve shareholders' returns. Foreign investors have responded positively, contributing to increased interest in Japanese equity markets. Let's examine global trade. International shipping volumes have gradually recovered following several years of disruption. Container freight rates remain below previous levels despite occasionally regional volatility. Logistic companies report improved efficiency as ports continue investing in automation and digital tracking technologies. Businesses increasingly prioritize supply chain resilience over simply minimizing costs. Rather than relying exclusively on single suppliers, many corporations now maintain multiple production locations across different regions. Also, this strategy may increase operating expenses, slightly executive believed improved resilience justified as the additional investment. Now let's discuss cybersecurity. Cybersecurity contains increasing frequency and sophistication.